What's up, CMQ CMQ investors? Welcome to the latest update on my portfolio, specifically how my portfolio is allocated across my various investments, stock market investments. I was going to stick to a rolling 30-day update schedule for these because you liked the last one so much, but because I also want to be 100% transparent and honest, I think that's a real distinguisher. I made a big update to my portfolio recently, so I want you to see it, practically in real time. I actually just updated this in terms of the math. I just recalculated things last night. So, this is a pretty fast turnaround. If you have any questions, leave a comment. I enjoyed the conversation. Please also like and subscribe, share with a friend. That goes a long way. Now let's get to it. So the first thing you're going to notice about this current allocation, or how it's changed anyway, is there's a larger portion of my portfolio that is dedicated to low-cost index funds. That 62% is split up between two specific ETFs. It was not intentional. This is just kind of what's happened over time. That is the VOO and VTI. Both of these are Vanguard ETF products. I'm not endorsing Vanguard. Jack Bogle is a personal hero of mine, so it feels cool to have some sort of association with the institution that he built. They're bullish when they should have been bearish, and bearish when they should have been. The key thing here is these are going to give me no better or no worse than the average rate of return that the entire market delivers, or at least the VTI does. Now the VOO, the returns tend to be similar, but the VOO is the 500 largest US-based companies, whereas the VTI is representing the entire US-based stock market. But I know that's kind of the boring part here, so let's get into the individual positions. I know that's what you're here for. The number one position in the portfolio is Apple. Apple is 12%. Look, Apple's a great company. Apple was maybe the second stock that I ever purchased when I finally had some money to put into the stock market. I've loaded up on it over the years. I feel very fortunate that it's done so well. Next up, in the number 2 spot, we have Berkshire B. So I didn't start buying Berkshire B, let me look here, until 2020. But I was loading up after that pretty much every few months. And that was, in hindsight, a really wise move. I'm up 40% overall, and as you see, it's now 10% of my portfolio. I should also mention that Berkshire's success in 2022 is really what's holding my portfolio up this year, so shout out to Berkshire. Okay, now the position that everyone's been asking me about, that people thought I might have abandoned completely. I had to almost remind myself that I didn't sell everything, because some of the responses to my last couple Alibaba videos, it made me think, did I sell everything? This portfolio, at least in my world, it has a meaningful amount of capital. And, again, I'm a hard worker. No one gave me anything. My position in Alibaba, even at 4%, is a large position, relative to what I've seen online from other people who've been, let's say, Baba Bulls. It's not a competition here, but I want to be clear. I have not abandoned this. I just overdid it. And I underestimated just how extreme the CCP was, which sounds so stupid in hindsight, but I didn't feel good with it. 12% of my portfolio being a foundational position. Apple, for example, or Berkshire, they didn't start off at 10 or 12%. They got there because they've done so well. So I just think I overdid it. And again, I'm still very much invested in Alibaba's future success, just not to the extreme level that I was before, or what now feels like was a little bit extreme. At the end of the day, even if it goes to zero, I still have these sunglasses. So I made the decision to reduce my Alibaba position after going down 30%. That is something, when I look back at my logs from over the years investing, and if you see from my performance video, I'm not saying that I'm Warren Buffett, but I've got a good sense of money. Cutting some of those losses, even if things buoy back, that has served me well because I can deploy the capital elsewhere in something that's less risky. And sometimes, guys, it doesn't always come back. And I'm not saying that's Alibaba, but now there's this assumption that it's undoubtedly going to come back. And I hope it does. I think it's down another like $15 relative to where I sold. So now if you're wondering, the capital that I pulled from Alibaba went directly into the foundation of my strategy or my portfolio, which is the VOO. So I took from the CCP and I put it back in the USA, baby. Woo! Now, speaking of the USA, one of my favorite companies in all the land, Costco, is 4% of my portfolio. In February, I added to this position, and then actually in March of this year, I added even more to this position. Those additional shares are up 15% in aggregate. I try not to be an investor who cares about, how am I doing since 2 months ago. Costco is a long-term play, and it's a company that is I'm very proud to own. Finally, there is Microsoft. Now, my cost basis for Microsoft is 202, and the only additional shares that I've purchased over the time that I've owned it have come through automatic dividend reinvestment. investments. Just curious in the comments, how many of you do that for stocks that have a dividend? I know for pretty much everything that pays a dividend, I have it automatically reinvested. And that includes the VU, by the way. Also should mention that Microsoft is in my taxable account, so I have no plans to sell, and ideally I could just hold it for decades. So that's 97%, what I just went through. That's 97% out of 100. You're probably wondering, what about the additional 3%? Well, 1% is in cash. That's just what it is. Another 1% is in Google, which is a position that I already had a very small bit of exposure to, and I added a little bit to with just some kind of like slush fund. I have a very tiny amount of Facebook. I've been liquidating Facebook over the last year. Did great on that stock, but I'm following what I've learned from the wise investors who've come before me. When a company loses its competitive moat, or the moat's starting to shrink, that is a reason to sell. And I saw the writing on the wall with Facebook. It seemed like well before other people did, and I acted accordingly. I didn't delay. And again, that's been a great position for me. It was a little bittersweet because Facebook was the very first company that I ever owned. I left a corporate job. They gave me they didn't give me, but I had maybe like $4K in a 401k, and I was going to a startup. I used half of it to buy a laptop for my new job because, they didn't provide that stuff. And I put the rest of it in Facebook. So that, call it a $2,000 investment, give or take, did great. If you're interested in hearing more stories about my experience as a Facebook shareholder, let me know in the comments because I do have some. The final two positions here, guys, just before I leave you, we have TechTarget, which I mentioned in my performance video. That's a company that I have a very small amount of, but it's done great. I wish I had bought more. I'm still glad I own it. It keeps me more interested in the company itself. I bought, this is funny, I had that slush fund. I bought a little bit of PayPal just to get a little exposure to it. It's not the most rational choice. It's actually down like 20% in the last probably 5 days, but that's one that I can hold for a long time, and it's in a retirement account, so it's not, I can kind of move it around with a little more flexibility. And the final is a company that's called ShotSpotter. I bought this company without caring much about the fundamentals. I was more smitten by my own analysis, and that can happen, but I took a very small position, so having the little position in ShotSpotter keeps me interested in it. I pay attention to it, and I think that's it's good for me as an investor. I look at this as I'm trying to study as many businesses, good and bad, as possible, and develop that pattern recognition, just like Warren Buffett, just like Charlie Munger. And then perhaps along the way, I will spot the amazing opportunity that is available to me, because as Charlie Munger says, opportunity comes to the prepared mind. But that's just my take. That's my portfolio right now. Let me know what you think. In terms of big changes, if we just do a quick recap, actually, of the top positions, how are they doing year to date? And we don't care too much, but it's worth looking at. So the VU and VTI are down about 7 and 8% respectively. Apple is down 8%. I was actually surprised by that. I don't watch Apple that closely. It's such a long-term play for me. It's been in my portfolio since I've practically had a portfolio. Berkshire B, like I said, the saving grace, it's up 16% this year to date. Costco is up 7%. Alibaba down about 26%. And then Microsoft is actually down 14%. So I kind of expected this. I don't want to act like I'm enjoying it, but I knew that the world just doesn't work like this, and that there'd be some sort of reversion to the mean. And the best thing I try to do anyway to not get hurt too much by it is just not buy companies where they don't have cash on deck, they're financially weak, or they're very they have a lot to prove. I like companies where I feel like they've got a firm foundation, they've got a strong trunk to the tree. I'd love to hear about what's in your portfolio. If you have any questions for me, drop them in the comments. Please subscribe, share it with a friend. And if you have any topics you'd like me to discuss in videos moving forward, you guys can tell I'm putting out the content. I'm trying to get better and better, and this is the only way I know how to do it, is just to keep doing it. Your feedback has been incredibly helpful. I appreciate you being a CMQ investor. For CMQ Investing, my name is Chris Franco. Thank you for watching. Thank you for listening. We'll talk soon.